Mic check. 1 2 1 2. CTM, what's going on, everyone? I hope you're well and doing great. We have no video today, in so much as that we are remote location tomorrow, Friday, and then back to the little guy, the little window on a Monday session. Looking forward to this one as well. We have a lot to talk about today on this FOMC day, this dovish hold FOMC day. And we're going to get through it all and into it all. And we want to build off of yesterday's discussion on potentially when gold peaks. Take a closer look at that. We want to go ahead and start off and we want to make sure that today we're going to give a thorough cycle review of where we are right now in Bitcoin. By the way, yesterday's session we were talking about from a micro standpoint, we're looking right at the immediate price action over here, and we're not looking from a cycle perspective. And we see that we're in a pretty strong downtrend, and then we have this channel developing. A lot of people refer to it as a flag, whatever your flavor is. We saw a breakdown outside of that channel, and then it looks like we're getting a little bit neutral. But if you go ahead and bring this line up over here and highlight our other structural line above, even yesterday we hit the lower line of resistance. Today we're just hitting that upper, and you can see where all of this support was established throughout all of December, mid-December, and into late December. And, that's where we are right now. So we haven't yet been able to neutralize this breakdown. I would say this breakdown is still in effect. And I would say that if we get above that peak of today, right, you could easily imagine a situation where FOMC is out of the way. You get through Powell's press conference unscathed. He's hitting on, you know what? We got this reserve management going. We're just going to be pumping in $47 billion through April, and then we're gonna taper that down all the way to 40 billion. By the way, it was brought up inside the Discord that we have the first turn up on monetary base total. And this is the new Fed cycle. And you could see as monetary base, guys, I told you a long time ago and over that M2 is absolutely useless. People are like, well, global M2. And I was like, took a look at it with you, and I was like, no, monetary base total is where it's at. And you could see that from July all the way until now, it was coming out. We know that Bitcoin is very sensitive to liquidity. Bitcoin in its largest drawdown so far of the cycle beginning over here in, we called it in December of 2022. Here in January 2023, what happens? Look at that, monetary base total begins rising. What about the drawdown that we went in through on Bitcoin? And we went all the way through the election, right? On Bitcoin, and then you saw it briefly come up. This is where we are in Fed cycle. And we're in this period over here before the great monetary base debasement, before the next big debasement, the return to outright QE. And I don't think that we're anywhere close to that, but one never knows. And my expectations, if you asked me, would be that this phase here continues for a lot longer than people anticipate. Okay. So we don't know. That's what we're here to monitor. And we're watching the Fed's balance sheet. I always tell you, watch the Fed's balance sheet. Balance sheet now, quantitative tightening is stopping. We're looking at balance sheet. It's organic balance sheet expansion. At least Powell called it back in 2019. Now he tells you it's reserve management purchases. Whatever. The balance sheet's rising. And, look, the bull of all bulls, which is Bitcoin, begins its run from the people who called Bitcoin's bull market breakout in December 2022, 17,250. The bull of all bulls, I've said the whole time, begins running once monetary policy aligns. We're a little bit closer to monetary policy aligning as the next phase begins. That's QT stopping and balance sheet expansion beginning as rates are coming down. However, monetary policy aligning is when the return to outright QE happens. I have no idea when that's going to be. We'll be watching out for it. But that's a major development to share with you today. Thank you for Don for posting that inside the Discord. We're waiting right now on Bitcoin to see whether or not it's able to nullify this breakdown that's currently underway. And so often when you have that breakdown, again, the retest, this is still a retest, even though you can say, well, it broke down, Jordan, but now we're back above it. And I'm saying, well, no, here's where that actual support was established. That's the resistance you need to clear. To give you another example of that occurring right now in real time, I'm going to point you first towards Besant, and U.S. Treasury Secretary Besant is saying, listen, absolutely not. This is not a case of like we cannot confirm or deny. This is Besant saying, absolutely not. We're not intervening in the dollar yen market. We're not printing dollars to buy yen. It's not happening, which a lot of, let's say, just chatter has been about that ever since the weekend, over the weekend. And look at this though. How amazing is that structural line that we have here holding as support on the bounce? And this is a bounce right now, right? You got some heavy support that was blown through. That should be resistance on the way up. And if we take this out, we know that we would be targeting significantly lower on the cross. But here's the DXY. And you could see, and you know that I've told you. So let me just go ahead and bring this line up first towards here. This is where it originally was. And then we had the breakout, right? And then we came in for a retest and then resumed up. And after we resumed up, I bought this line down, right? And I said, well, that's where the retest was. I know the peaks are over here. I'm looking for this to hold as resistance. If that breaks, then we'll be like, this is nullified. And we're in a downtrend right now. There's no doubt about it. But as far as I'm just trying to show you the same concept we're looking at here on Bitcoin when I'm telling you about the breakdown and now where the resistance is. And you could see it live here on the DXY as that structure right there that holding as support for now. This is just a bounce right now. Uh, 10-year continues that sell impulse, but still just this mega coil. A big move is coming. My intuition has always said that it's going to break to the upside and it's going to go a lot further past 5%. But if it breaks down over here, this is my line in the sand. At that point, you know what? This is breaking down and bonds are going bid. This is oil. We're looking at a monthly chart over here, and so far looks like another test of this resistance. This is a major breakout if this were to happen, and it's pretty early. And I don't know what happens next. And if we wound up breaking down from here, we could see significantly lower oil prices as well. So that's the importance of drawing lines and then waiting for some type of confirmation before taking a position. However, if we got into this zone over here, I would be looking for strong accumulation on oil. Let's jump it back over here. And that is so far on this FOMC day. It's not really FOMC day, by the way, is a dovish hold today. What we're looking at more importantly here is big tech earnings day. And we're looking at both Microsoft and Meta today. And you know what? I think as we get through this earnings seasons, the story is going to become much more about that we continue to see earnings beat and rising estimates. Very strong earnings. The weak dollar should continue to be a little bit of tailwinds helping that as we move further into the quarter. And that's things that are pointing towards, well, have you ever seen a recession why earnings estimates continue to rise? You know, and still 4-year cycle though, we're it's a recession in 2026. I don't believe it. A lot's going to have to develop to change my mind about that. That's an ugly candle ahead of the FOMC. But again, we have not only FOMC today, we got big tech earnings. And as long as the one red flag that could happen in my whole view here is if we see at any point CapEx spending being pulled back. That's why I think both of these hyperscalers, Meta and Microsoft, are so important. So that is definitely something that I am watching and will be watching. Next week, we have Google, Alphabet, and Amazon, also very, very important over here. And our positioning as we're going through this is simply holding right now along on NVIDIA and also a short. So we're hedged here on Ethereum, able to lock in nice profit on Cardano on the short side, able to lock in very nice trade on Bitcoin on the short side. We're now neutral on their both, and Bitcoin here, I'm sorry, and Ethereum here is the only open position. Buy side only, Ethereum is the closest to entering over here. And why I bring that up is because, again, the last time that we were this point of cycle, but Jordan, they're telling me there's this 4-year cycle, and you're talking about a Fed cycle. What's going on here? The last time we were at this point of cycle, while we saw two things happen, we did see tech lead, and so far we are seeing tech lead. Nasdaq here just shy of its all-time high on this session, and Bitcoin is still lagging behind. Exactly what we saw at this point last cycle. And we saw, first of all, we did see Bitcoin last cycle make a lower low. It first shot up a little bit. Let me zoom in into September 2019. Not that I'm looking for this to repeat, but you first had this initial, burst, which we just had a little bit of a burst, and then a lower low, and then that one more lower low. So you had first one lower low, and then you took out that low twice, and then that was the end. Bitcoin stabilized several weeks after balance sheet expansion started and was running up. If we did not have this anomaly of them locking down the globe, likely that would have been the low, and this thing would have been higher coming into the halving. That's what happened though, and you never know what's going to happen going forward. So does that mean that Bitcoin has to make a lower low? No, it made a lower low last time. Well, Jordan, last time they were doing 20 billion. This time they're doing 47 billion. Yeah, but the balance sheet was roughly half the size. Not exactly, but roughly. And the pace of balance sheet expansion in ratio to the balance sheet is roughly the same. So, well, what else was going on that could have caught? Do we think that uh look, we just tried to prepare ourselves mentally. It's possible we make a lower low on Bitcoin. Right now, we got that technical breakdown in effect. It's all possible. It doesn't mean that it will happen. And it doesn't mean that this time tech is going to lead, but it certainly looks like tech is going to lead again this time. So everything seems to be on time as far as what we perceive this cycle would look like. Now, let's take a look at what's going on. And again, we'll see after today's FOMC and this Fed. Maybe we're able to neutralize this breakdown on Bitcoin. And if so, this is the repair that I'm looking at. And then that repair takes us into potentially the resistance of the first meaningful repair. That would be a meaningful repair. This is a major, major level that was broken. Again, the spot ETF shakeout, the Japanese yen unwind, and now we're looking here at that breaking down the first time of cycle. Even though we haven't taken out the April low, which means we continue making higher highs and higher lows, structurally, Jordan, I know people don't do TA like this. I don't care. This is how we do it. And you can see that we've taken that out. And now this would be the meaningful repair that needs to be reclaimed in order to get it out. Oh, weekly inside bar. That means that we're getting ready for a big move one way or another. Craig, you know what? I love you all. And someone brought to my attention, thankfully, Cabby, this week, Jordan, you don't need to tell us like what you like. You just do you. We know. We know that as you see it, we know your track record, and we know that if you need to pivot, you'll do it in a dime. And I was like, thank you. Thank you so much. Thank you. Because self knowledge is priceless. And I need to take a good, strong look at that. He's like, I think you've been doing that more since you stopped doing just private videos and are out there in the public. Like, you need to defend yourself. Jordan, you don't need you know what? That was awesome. And I need to work on that. So I'm going to go ahead and work on that. You know what? I'm always looking to do better. This is, I should say, my expectation of what an asset undergoing S curve adoption looks like. And the takeaway from this is this. And you're looking at Amazon here. This is Amazon during the hype cycle. And these two right here are its top deviations, right? You got one, two, three. And you noticed that as Amazon hit its early majority, which was just after the dot-com bubble, Amazon through all of the like for the next several years went through facing reality phase. And then coming out of it, it went into the early majority, and then it was able to make it to where it is into the late majority. But notice how it was able to ultimately walk all the way back towards its top deviations. Now, when you look at this, you could think because they've been so I've aligned them and their volatility is so closely resembled that that might suggest that Bitcoin is going to follow that path. And it's not going to. I assure you that outside of Weimar Republic, hyperinflation, there's no way that Bitcoin is going to trade in the next 9 years at $65 million. But here's the thing is that Bitcoin is not walking up towards Amazon's top deviations. Amazon did. Bitcoin's top deviations are a lot lower, right? So you have over here, like, yeah, I mean, that would be really high, right? If it were on that timeline to walk up towards its top deviations by the end of the decade here, 4 years from now, Bitcoin would be really high. My expectation is that Bitcoin is going to walk up towards its top deviations, not that it's going to reach that prices. And so far, this was like, well, let me do this slide first. This was my own personal expectation, and I could say that that is way off. There's a big gap between where I expected the price would be and where it is today. We could come back over here, and I'm looking at two things. I'm looking at my floor, and I'm looking at the power law flaw. Both of them right now coming in. Mine goes a little bit lower, but let's say 74,000. And then I want to revisit this over here. This is, I was trying to put together a call. The name of this template here is orange is a good place to buy. You know, if you were to get that, that's coming in at the levels we've been looking at all week, right around, let's just call it just above 60,000. And it doesn't mean, right? You could say that I could put this down over here. This would be what a normal bear market would be if you were to have something like an 80% correction or something like that. It's a 70% correction just into 30,000. Maybe you move that down a tiny bit, more or less. I mean, I think, oh, I know if we touch orange, that for me is a opportunity to dollar cost average. It doesn't mean you won't go lower. When I told you several weeks ago, not several weeks ago, less than several weeks ago, more than a few weeks ago, listen, this is the time potentially here to like the first time I'm talking about it. This is the time to look at altcoins that you think have potential and likely coming out of balance sheet expansion. It's Ethereum that leads the way here. Ethereum, after putting in one more lower low against Bitcoin, and that was it until the cycle top outperformed Bitcoin. And nevertheless, you know, like pick like Cardano even, which I wouldn't be like, hey, what am I interested in? What has a lot of network effects here? But Cardano's trading like 35 cents. Do I think at the end of this cycle it's trading higher? Absolutely, I do. Do I think that there's a potential that Cardano could fall another 50%? Yes. And if you were to take an investment in X altcoin, expect that there could be another 50% drop at any point, and that would be the opportunity here to get fully possessioned into it. Do I think that is all highly speculative? Yes. But this is the first time since the bull market breakout that I'm saying now is the time to potentially look at those that are interested in your favorite altcoin for that type of speculation. Silver. Let's take a look at silver, and then oh, there we go. Let's take a look at silver. Silver trading at 114. Mega candle over here being retested. Yeah, you know what? I would be watching too, in so much as that. Obviously, gold here continues to defy gravity and expectations, trading at $5,300. And we also know that on the monthly chart, we're looking at 11 months of gold being overbought. So that's the stupidest. No, sorry, it's not nice. It's really not intelligent when something is overbought or oversold to use that as an opportunity to base your overall thesis on. It's time to exit that position, right? And there's something we looked at with Bitcoin over here. We said, or it was put out there that guess what? Bitcoin here has I don't have the chart there. I have it right here though. Still, so by the way, as we're looking at Bitcoin, so still well above. This is the top of the 2021 cycle. It was then tested over here in early 2024. That trend line over here then held as support throughout the March and April madness of 2025. And that has continued to held over here. And that would be, I mean, that's all very healthy. I can't call a bull market has come to an end. A bull market that I called early, I can't call it as coming to an end. Why it's still above previous cycle highs and also making higher lows and higher highs. Seems premature to me. Yeah, that was a de-risk that we looked at. And yeah, that was the first time you had that major de-risk. But you know what? We're still, and then you have over here the previous cycle ceiling. And you could see that, you know, if this breaks, in my opinion, something is wrong. That's 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 I think that's lower. I don't think that's in play. And that's still above 55. Bitcoin is cheap. That would be the orange level in this area. The orange level this is a really good time if you're looking to lean into Bitcoin, in my opinion. And that's that. And then I'm looking for a chart here that I have with the RSI, and I don't seem to be able to find it. But point was, a lot of people were talking about when the RSI is oversold at this point, expectations are XYZ. And I was like, yeah, well, it depends if you're in a bear market or a bull market. And honestly, we don't know. And if you're in a bear market and you put in an oversold RSI, that's fine. That's usually where you then put in some type of bearish continuation pattern, like we're potentially in right now. And if you take out that low, you're making legs down. So, you know, silver is only now in its on the monthly, as far as being overbought, is just entering over here in October was the first month. So we have November, December, now January in its fourth month. And if you all remember, as we first went overbought on the monthly, I was like, listen, I think we're just getting started. And then I deferred to what happened in gold. So, could this go on for past silver bull runs have lasted approximately 2.5 years. So that would suggest that there's significantly more time to go. But if you're a trader, right, and you're looking at this, and let's try to line this up. So first I need to know where that blue line is coming from. That blue line I could get erased in this moment. The reason that blue line was there, I was just looking at some fibs, but I gave you 90 and then above 300. I like that fib up here because I don't think that eventually, when silver one day in our lifetime trades above 300, that I would be looking to sell. I did tell you when I'll be looking to sell, and I'm going to cover that in 1 second, right? But if you're a trader, let me go ahead and just move this up. If you're a trader and you're looking at silver and you think, well, this is going parabolic, and well, first of all, right there, right? That would be a sell impulse breakdown that's occurring. Now, that might give you the opportunity, depending on what that breakdown looked like, to be able to go ahead and accumulate more. I think above 90, above this last bit of support I put in, is extremely healthy. Anything above the breakout 67 here is just, we're still in a strong bull market. So yeah, dude, I'm not in the habit of, on the downside, people are like, don't catch falling knives. And there are some people who have made careers out of catching fallen knives. There's a story of if you searched Japanese day trader, you'd probably find it, of this guy who was obscenely great, as the myth goes, and that was his system. And looking for, like, basically falling knives on tech, and then going ahead and buying them. It's possible, but it's a high risk, high reward, right? Is this the same thing when something is falling up to go ahead and try to catch the top? I think so. I wouldn't do that. It's looking beautiful. It's looking beautiful, right? And there's something going on behind the hood, I've been telling y'all. So anyway, that would be my, if you're looking to play this and you get a breakdown over here, okay, make sure you're nimble because these things move quick. This would be where you're wrong. And a breakout above here, assuming you break down over here first. If you break back over here, well, get on the right side, or that's your stop loss. And that's how you do it. So let me put it back in my fib. You guys want that up here? I'm gonna forget where the fib was, but that's fine. I'll look at it another day. Let's keep. Here we go. Gold is unbelievable here today. That's all I could say about that. We were looking, and I was explaining to you all about when I would sell gold. I just want to clarify over here, and it's, I have a question. You're saying that gold and silver will peak when the Fed starts printing money, shortly after the Fed starts printing money, meaning gold and silver will drop at that point. And I'm not understanding why. Will you help me in understanding this? So let's take a look together, right? Boom. So here we are. And I know this is messy. I'll break it down one by one for you. And I'm going to start over here on the last massive expansion. You all remember it in March 2020. Powell floods the system. And you could see, because we say shortly after the devaluation, gold and silver wound up peaking soon thereafter, right? So we got April, May, June, and then July, and then into August. And just so I know the date of that, into July, 4 months later, you know, wind up peaking. Now, if you go back to this particular moment over here, this is the first time that the birth of QE, and this is a massive expansion. It was at the time, for those who weren't there. Let me tell you how massive it was, and it was massive. It was, man, I might be off by $100 million. It was $350 million in two bursts. 350 million. The last QE was initial $4.1 trillion, and then it was followed by $1.2 trillion for the next 2 years. This was 350 million compared to 4.1 trillion. What do you think the size of the next massive expansion is going to be? Do you think you own enough hard assets? Do you think Bitcoin is not going to do Bitcoin things? So 350 million, and you could say, Jordan, for sure, 120 days later, you did not see the precious metals peak, right? Of course, no one knew what was going to happen. By the way, a lot of people thought this was super deflationary. A lot of people here thought this was also deflationary. Anyway, this didn't peak until Operation Twist was announced, right? Operation Twist was announced, and then you finally saw gold and silver peak. You had QE3, and then you peak again. So this needs to be considered, right? Uh, and then I'm going to fast forward. So obviously, like, well, Jordan, back here, and by the way, I have to share this. This is very important. The bank bailout happened under George W. Bush Jr. And then shortly thereafter, uh, Obama won the presidency. And we were looking for change, right? All this unjust wars, this lying about massive weapons of mass destruction. And then I remember that after Obama was elected president, he goes to the White House to meet George W. Bush, and they come out of the meeting shaking hands and smiling, and they do a press conference right like the doors behind the Oval Office at the White House. And the first thing that Bush says is, Obama, my friend Obama here, he asked me if I would give the second half of the banker bailout, $350 billion. And I said, of course. And I said to myself, are you kidding me? These guys work on the same team. And it was the first time I realized that those all anyway, that was an important moment in history. Just wanted to share with y'all. Now, here's something I'm going to point to. All right? I thought rate hikes, yeah, that's the time to buy gold and silver, right? Rate hikes, that's the place to buy gold and silver. Why? Because it sets up the slowdown into the recession. Over here, rate hikes, yes, rate hikes, that's the place to buy gold and silver. And then we had the rate hikes here in March 2022, and I was wrong for multiple reasons. One of the main reasons that I mean, yes, obviously, gold was trading at $1,500 then. Sorry, gold was trading at, I'm trying to find out which one's gold, which one's silver. Gold was trading at 2,000 and is trading at 5,300 now. Silver was trading at $25 and is now trading at 114. So yeah, from a long-term perspective, it's fine, but they both went into significant drawdown from there. And I thought, and I do think it's correct, partially, that the reason that was happening was because inflation was really running hot. And it wasn't until we finally saw inflation make the turn and peak out and begin to finally roll over that was the bottom of the precious metals. So I said, okay, next cycle I'll be watching that with you all. And when they begin hiking, I'm going to look for gold and silver, but I'm going to be looking for, more importantly, what's going on with inflation at that particular time. Because don't forget, we expected inflation 9.1%, come down, and eventually, after the next major devaluation, I expect that's going to get kicked out. Now, President Trump, it's an election year, midterm elections. He's talking about handing out stimulus from the tariffs to people. That's going to be a nightmare if that happens. That's going to cause inflation to rise, as we know, when they hand it out directly to the people. It has absolute horrific inflationary ramifications. We have to watch out for that. We don't know if that's going to happen, and that's a curveball that could happen to us. Now, what seems to be pretty strong signal to me, and I said I'd break it down one by one with you, is when QT begins. So here you have QT beginning, and you see gold and silver go through a nice little correction. Shortly thereafter, bottom. Notice that they're able to bottom even if you have the globe lockdown. And then over here you see QT begins again. And I expect, by the way, next Fed cycle that rate hikes and QT will once again be very close together. That's the playbook, right? Things are running too hot. You got to slow it down. You begin raising rates and you got to start running off the balance sheet. So instead of looking to buy as the rate hikes begin, we're going to be watching for when QT begins, and then we're going to be looking for a drawdown, and then that's when we're going to use our TA and look for, conservative break, double black diamond, and that's going to be the time that we look to, or I look for, to get the very bottom of what will be the precious metals at that particular time, right? Now, we have another situation here where we're talking about the peak. And I'm saying to you, well, we looked at how gold bull runs eventually lead to Bitcoin bull runs. We look at the timing of the two. And when I look at the Fed cycle here, I don't believe that we see precious metals peak until we get towards that time after the expansion. And this is one point over here. And they kind of go sideways, right? They kind of go sideways. I think, look at this though. One more thing I want to show you, and then I'll come back to the peak, is can I line these up? Here's QT beginning. Look first at gold. So QT begins, and I'm saying to you, that's likely going to lead to a significant drawdown. I don't know, whatever it is, but a drawdown and a place to line up, like a trend line break to enter into the market. And then the second place, the second confirmation, is once the high of whatever price was trading at as QT starts. Look over the next time over here. Here's the next time QT begins in red. We look for the breakout, and then this secondary confirmation is going to be right over here in this. Yeah, it draws down. It didn't just run up, but that's the secondary confirmation. Let's look at that on silver. So silver is green. I can't get rid of very easily the line. Silver goes into a place, look to get it. And then silver, you could see, doesn't break out until here, right? And that's the breakout above QT. Now look at the previous one on silver. Silver is in the green. So you set up the place to get it in, right? And then here's this is bad. So this is really bad because silver breaks out over here, which is right where we are right now, right around the time balance sheet expansion begins. But during the lockdowns, silver gets completely demolished. And anytime there's a liquidity crisis, that's the expectation is gold performs better than silver, and then coming out of the expansion, silver performs better than gold. So that doesn't line up so as fresh as I would like. The question is though, why after the balance sheet expansion would you be looking for the end of the cycle? Well, I personally believe, obviously, coming out of that expansion, for sure, precious metals respond very favorably as everything else. However, what I believe is after, sometime after, last time it was 120 days roughly, is that because of the amount of liquidity in the system, a lot more becomes more desirable. A lot more growth becomes more desirable. And that's around the time you begin seeing the move into meme stocks, the move into altcoins. There's a lot more speculation to be had. And then you could look at just tech alone, right? And you can say, well, like I was gonna say something like iron would be a good example right now, or sats, or I was gonna say like even Oracle becomes more attractive, and Oracle's like looking like I don't know, pretty sketchy, but Oracle would be way more attractive at that point than gold. Like you're looking for now that liquidity stabilized for that growth to take place, and there's simply a lot smarter places to put your money to work, which is why I believe that as we move towards what would be the end of the cycle, after the expansion, that would be the place that I would look for, looking to exit my gold and silver positions, and then I would be looking to begin to put them on sometime after QT ends. That's the way I see it pretty now. Are we looking a little buggy? So that's where we're at today, everyone. Thanks for being here. If you didn't get a chance on your way out, go ahead and do hit that like button. Greatly appreciated. And I wish you all have a beautiful day. God bless you, everyone. I'll see you all tomorrow's session. Have a beautiful day.